So can you trust financial advisors? Are they only looking out for themselves? Can this camera get any closer? After watching this video, you will find out how much advisors make off of you, if it's a good investment, if it's something that you should definitely consider, or are they just scamming you from your money? Be sure you stick around to the end to see how you can quiz your financial advisor, or shoot, even your broke uncle trying to give you financial advice. Quiz these people so you can see if they actually know what they're talking about. That'll be at the end. All that and more, so keep it locked. It's Crystal with the Cash Compass. Alright, so welcome back. I am here to teach you all the things that you should have learned about money in school, but for whatever reason, they didn't mention it. Now, I don't know if that was intentional, but it seems like it. Please be sure to stick around because we talk about everything from personal finance to the economy to investing, and I get right into it. So let me preface this by saying it does not only apply to financial advisors. If you have a 401k, listen up! This applies to you too, because if you did not know, some companies will have these robo advisors who are shifting your money around to help you get some more returns. So stay woke. So what is a financial advisor? Financial advisors are sophisticated advisors who will shift your money around and help you come up with a plan for all the years that you're going to be alive, and eventually, hopefully, when we're 65, old, bones cracking, you get to have a little bit of money to play with. They do get paid based off of what they make for you, which sounds good, but there is a way for you to get paid and not pay anybody else, so keep on watching. So how do they get paid? They get paid based on what they put you in. So almost every single advisor that I know will put you in stocks, bonds, mutual funds, index funds, things of those natures, which is pretty much all paper assets, right? Nothing physical. And if they invest in gold, normally it's also paper gold, which I can make a whole different video about how scammy those are, but let me know if you're interested in that. So depending on what stock or what mutual fund they put you in, they can get a bonus. And it's not a couple $100. I mean, we're talking about thousands of dollars of a bonus depending on what they place you in. Conflict of interest much? They generally make about 1% of what you make, which might sound like a little bit, but if you're doing this over the course of 40 years, it adds up. What's important to know about financial advisors is that they're very educated on the products that they're offering, but maybe not so educated on the economy as a whole, which is very important because a lot of people might think, okay, something's going on in Iran or Iraq, that ain't got nothing to do with me. But we are such a connected world that something that happens in a different country can affect us here. Perfect example, in 2008, when we went down, a lot of countries went down as well. So we are a very interconnected world. Right now is a good time for these financial advisors because stocks are just going so high, astronomically high. I feel like every single day we're reaching an all-time high. And a good question is, well, why? Is the economy just doing that well that we're just making all this money? Should I just be quiet because my 401k is looking real healthy and fat? Maybe if you're the average person, but if you're watching this video, you special. The Federal Reserve prints money out of control, which is kind of why I always say don't save money when they're over here printing it for the free. You want to invest that money because it's going to be worthless at one point. But I digress. If you want more information on that, click this video up here. I have a couple of videos talking about the economy that really breaks down what I mean by they're just printing money out of thin air. So please watch that. But when they do this, they target certain asset classes to inflate. So right now they're targeting stocks and they're targeting real estate. And they do it in a very roundabout, creative way, which I can make an even more detailed video. So let me know if you want to see that about how the Federal Reserve prints money and where it goes. But long story short, they play financial musical chairs and boom, it lands on stocks. So you get that big, nice, healthy, fat 401k and you think you're about to be retired on a private island somewhere. A good financial advisor would be able to tell you exactly what's going on in the economy. And I'm not saying that you can't invest in stocks. Personally, I think it's a little bit overheated right now, but I don't know how long it can go on, and neither does anybody else in this world. But a good advisor would be able to say, yeah, it's heated because of XYZ, but here's why I think that we can still stay in here and eke out a couple more % return. So is it possible to find a good financial advisor? Perhaps. There are a couple of questions that you must ask them, and this will determine if they are worth your time or not. Now, personally, spoiler alert, I think you can do this on your own. regardless if there's a person who is super knowledgeable and super educated, you shouldn't put all your trust into that person. I mean, you work hard for this money. Why would you just give it to some random Joe who's making money off of you, who doesn't really have your best interest at heart? Right? These are some good questions. You have to be the one who cares enough. You have to understand that you're putting all your free time into this job and you're putting it into these assets, so you need to be educated. And if you're educated, you can make these decisions without a financial advisor. But if you don't care about that, ask these questions so you can know if they're the right one for you. Number one question is, are you a fiduciary? Fiduciary means that they have to work in your best interest, which to me is crazy they even have an option to not work in your best interest. But basically, if they're a fiduciary, they can't invest in things because it means a bigger check for them. They have to invest in things because it's a bigger check for you. What are the fees? All the fees. There are hidden fees and there's the fees that are right in your face. You want to know exactly what you're paying because they might sneak something in there, and before you know it, you then gave off 100 grand of your own money because of their management fees. And they get those fees whether or not you're doing good. I mean, it's 1% of your portfolio normally. So even if you tank, thanks for the money, my bad. What other asset classes do you recommend? I think a true financial advisor would be able to tell you about physical and intangible assets. Stocks and bonds are intangible because you literally don't touch anything. It's just a whole bunch of numbers on a screen. Gold, businesses, and real estate are physical. They are in your possession. You can control what you do with them for the most part, because of course, government. But for the most part, you have full control. Do they know about the other asset classes? Or are they just trying to sell you whatever product makes them the most money? If all they're saying is to invest in stocks and bonds, run. Here's a really important one. How is money created and maintained in the system? Because I mean, how are you going to tell me about money if you don't even know where it comes from? The answer to that question is money is created through debt. Money does not exist until somebody needs it. When you go into the bank and you request a loan for a car, boom, $20,000 has just been created out of thin air. There's not a schedule of, okay, we're going to print $1,000 a month. No, it's literally created off of debt. This whole system is created off of debt. And I've mentioned this before, but it can't be repaid, because if your car loan is $20,000, they print $20,000, but you are responsible for interest also. So if it was just you and the person who loaned you the money on this world and you owed $20,000 plus interest, you couldn't make that payment because there was no money created for that. If they can't articulate that, they might need to do some research, and they might not really have a good understanding of the economy and the way the banking system works and how to really take advantage and be on the richer side of things. Ask them what they think the real rate of inflation is. If you listen to the talking heads on TV, they're going to tell you it's 2%. That's BS. The government themselves used to calculate inflation a completely different way. If you go on childstats.com, you'll be able to see how they calculated inflation using the 1980s method that the US government themselves used to calculate it at. And that's at 10%. So while they're crying about they can't even reach 2, we're really at 10 if we're going to go based off of the old system. And there's plenty of incentives for them to go to have lower inflation, but I'm not going to get into that in this video. But if your financial advisor says, oh yeah, like we're at 2%, again, they don't have a real understanding of the economy, and then you might be looking for answers when your investment goes to 0 and they have nothing to say to you. What do they think interest rates should be? Interest rates are extremely low because of all of the central bank intervention. They should not be that way, and that is what really accounts for all the inflation in this economy right now. That is exactly why stock market is sky high and why real estate is at a level where you can't even really buy. There is no right or wrong answer to this, but if they are stumbling and not even really sure, then they might need to go through their homework. I want to put my money with somebody who has a good understanding of the economy, not somebody who has a good understanding of stocks, because things change over time. And if you don't know what's changing, you're not going to take my money and turn it from dollars to change. And lastly, what is a beneficial owner? For those who don't know, if you're in a mutual fund, you are the beneficial owner of that fund. What does that mean? That means you don't own it. You don't own it. You might think you do, but you really don't own those stocks. At any point, they can say, hey, my bad, this is ours now. When you're the beneficial owner, you get all the benefits of owning without actually owning. And that's good until it's bad, okay? So it's all good while the economy's up and everybody's happy, but if they can use it on you when they have to, trust me, they will. All right, that does it. If you think of any other questions or maybe your experiences with financial advisors, drop it in the comments below. Please like, please subscribe, please share with your friends and family, because we need to get this education around the world. All right, and I will see you next time, but until then, keep your money up.